Good morning and welcome back. You are watching BT, specifically business. Mike Eppel, good morning to you.
Hello, good morning. How are you doing?
Oh, I'm doing well. And we're going to start with some good news for those looking to fill up.
Yep, gas is coming down tomorrow. Melanie, the price is being directly affected by what I'm watching in the energy trade, where the oil rout seems to be on here for the past couple of days. It's amazing how quickly things change when we're talking about markets or commodity prices, and it's all about supply demand, as with everything. And right now, the demand is down a little bit for global oil, and it hasn't really hit the expectations that analysts had expected this summer for gasoline usage. Maybe because for a time there we did see record highs for gas. So the past couple of days, the price for oil has tumbled. Wholesale refined gas has dropped by close to 9% in just the past 24 hours. And oil's on pace for its biggest three-month decline in about 2 years. And interest rates, of course, are going up. The economy is expected to slow. So global demand for energy right now could be, at least, trending a little bit lower. We had these talks last week about gas prices spiking. Maybe later this year, we'll see. Right now, though, as of tomorrow, the chart is pointing to a 6 or 7 cent drop at the gas pumps, which will put it back down to around $1.51, $1.52 here in the GTA.
I just filled up. I just filled up. Shoot, I want. Okay, it's fine. Lose this one. Traveling out west now, looking at Alberta's budget, the surplus, massive.
Well, that's directly tied to what oil was doing for the first half of this year. And the projections right now have Alberta, which, by the way, is on an ad campaign, move to Alberta for low taxes and all sorts of other things. And right now their budget is looking at a surplus of $13 billion for this year. $13 billion in surplus. Think about that. And that is, they were running deficits because, oil cratered. Now they're back up to these sky high levels. For a time, they had that Heritage Fund, I think it was called, with the, putting surpluses aside, which they spent. Now they might be ratcheting that back up again. And don't kid yourself. The federal government's books have looked really good too.
Yeah, you got an email there, by the way. Someone's trying to email you or call you. Ding! I think that was you.
Stop.
Not that important? Okay, we'll keep going then.
I didn't see anything.
I heard a sound. Maybe that's on our end. Let's talk about record high. Eurozone inflation hitting what?
Yes.
It's a record high for August, sitting where?
9.1%. So this is kind of a microcosm of it's a difference from what we're experiencing here in North America, where inflation's starting to track lower, still up, but starting to track lower. In the European Union, with Russia, as of today, announcing that the Nord Stream pipeline for natural gas supply is shut down for quote unquote maintenance. That's just going to ratchet up their energy prices there. So Europe is dealing with a very different situation heading into the fall and winter months. The UK inflation rate's well over 10%, and interest rates are just going to keep going up because of all of this. So do not be surprised if the global economy sees a sharp downturn later this year and into 2023.
Mike, let's talk about the tech sector, specifically Snapchat, and they are looking to make some cuts here when it comes to their workforce.
20%. This is a significant rollback by Snap Inc. 1,000 jobs, but it's not out of the ordinary right now for what we're seeing in the tech sector. Again, comes back to the economic concerns and advertising metrics and all sorts of other things. And Snap, it's my kids use it. I don't know. I don't know if they're being inundated by advertisements or what. Not really on their phones. Maybe I should be.
You should be, Mike.
Probably should be. Keeping closer track of that. Nevertheless, the tech sector is starting to. They were hiring constantly. It seemed like every other day. Now things are kind of tipping over the other way.
Finally, for you, as we look to this August 31st, we do a little retrospective on what the month has been, and we look ahead.
Well, September is never good. No, from a market perspective, it is historically the most volatile month of the year. So brace yourself. Why? Everybody's back to work and looking at what's been going on, because August is typically quiet and kind of, we hear news headlines that, move things for no apparent reason. So August TSX down by 1%. A lot of that was just because of yesterday, which was sold off in the energy stocks. And for the year, down 8%. September is going to be interesting. Next week, we're going to get the Bank of Canada raising interest rates right off the bat.
So it'll be busy for everyone, including
It will.
yourself. All right, Mike, as always, a pleasure. We'll talk to you again same time tomorrow.